Hey everyone, welcome back to Chasing Returns. My name is JJ,
And I'm Zach.
and this is episode 6. And I think we're gonna kick it off to you, Zach, just like we always do.
Okay. Um, could you enable screen sharing
I
real
can.
quick? So yeah, I'm just Berkshire Hathaway filed their 13F last week, along with all other hedge funds. And just briefly, if you don't know what a 13F is, it's just hedge funds or various other portfolio managers or even corporations like Berkshire that meet a certain threshold of equity investments have to file this every quarter. And it just shows um, the American equities that they own um, as of the end of the quarter. So can you see my screen?
Yep.
Okay, so we already talked about most of this because a lot of it was revealed already via the shareholder meeting and other um, forms they filed over time. But so the big one that I want to talk about first is Citigroup. Um, the size of this position makes me think that it was a Buffett purchase. And what's interesting about Citigroup is that of the big four banks, it's known to be the um, recently the worst managed, but it screens the cheapest, like on a price to book ratio, price to earnings. Um, and this is interesting because Buffett in the past has said with banks, because there's so much leverage, he really wants to make sure that he's buying a really good management team at a fair price rather than a poorly managed bank at a cheap price. But in this case, it appears like he thought it was so cheap that it was worth stepping in. I think their tangible book value per share is like 79, but the stock trades around 50. And they do have a new CEO, so I think he's probably a fan of her. Her name is Jane Fraser. So we'll see how that one plays out. And then a little bit further down on here, they had a small add to GM. This one was surprising to me, Paramount. And this was a pretty sizable purchase as well, to the point that I have no guess whether this was Buffett or it was one of their other investment managers. If it was one of the other investment managers, it's a very sizable purchase for them. So, um, so it's either Buffett or it's a very large bet by one of their other managers.
Do
But
you use anything Paramount?
I no. So I'll list off what they own. So this Paramount was formed um, in 2019, I believe, in a merger between CBS and Viacom, and then they rebranded this year to Paramount. So they own a bunch of TV channels like CBS, Showtime, BET, Nickelodeon, MTV, and Comedy Central. Then they just started a direct-to-consumer um, streaming service called Paramount Plus, and then they have Pluto Plus, which is like their international. And then they own a movie studio, Paramount Pictures.
Yeah.
So you know more about media than I do. So
Yeah, I mean,
do you have any
obviously,
thoughts?
between their television networks that they own, CBS probably being the one that I use the most just because sports.
Yeah,
CBS Sports app's the one I use also for all my scores. Um, but the interesting one obviously is Paramount Plus, which,
right.
and I'm a person who will at least try pretty much every service or has a lot of services currently, more than I probably should have. And granted, I will, I mean, the beauty of it is you can cancel and restart it whenever. I haven't bought it yet. They recently did a Halo live action TV show and big Microsoft fan, so I probably will buy it to binge all of that. But I was waiting for it to finish so I could just only have to pay for 1 month. But when I do buy that, it'll be interesting just to see kind of what they offer. Because I'm pretty well versed. I mean, you've used Disney Plus, we've all used Netflix. I like Hulu. HBO Max is what's been killing it right now. I know we
Hmm.
both use that. That's what I had
Yeah.
on when you hopped on this call. All my DC shows are on there, so that's really love that. But yeah, that's a very interesting acquisition, especially since obviously more traditional media is kind not dying, but like it's going to have to transition. Um, And I mean, all the networks you named are major TV networks that they like own. Which I mean, I'm sure they can do well with properties off of. Comedy Central does great with clips on other media platforms. And Nickelodeon, obviously, just all of the IP that they have that resonates with children and most people. Yeah, that honestly surprises me though. I was not expecting that to be on here. Another one which I don't know if you're going to get to actually, unless you have anything else to say on Paramount, is Snowflake. Obviously, they're adding more to that because I'm sure they're where it's at now is below where they originally purchased it. Because I know that was a really hot stock, which Berkshire, I believe, got in before the IPO. And then it exploded and everyone was paying an extreme premium on it. And now it's fallen off a cliff.
Yeah. Yeah. So late 2020, they bought at the IPO, but they bought like the actual IPO, like the money that goes to the company. But then when it opened to the public, it like doubled in one day. So yeah, their cost basis is 120. But if we bought on IPO day, we wouldn't have gotten in until like 240. So this is the cheapest it's ever traded to the public. What I've pieced together on Snowflake is that Todd Combs, who is one of their investment managers, he's also the CEO of Geico. I think Geico implemented Snowflake based on something the Snowflake CEO said in a recent interview. And I think he was just so blown away by the service that he's like, I want to buy into this long term. And yeah, it's a little frustrating from my perspective, or both of our perspective, when the stock goes to 400 within a year and Berkshire doesn't trim at all, and then it's now below 120. But I guess that means that Todd Combs, he didn't think it was crazy expensive at 400. Otherwise, I don't see why he wouldn't have sold.
Yeah.
But yeah, it's in the data cloud. I've tried reading about it. I've tried listening to the CEO talk about it, and it just all goes over my head. I cannot tell you what it really is.
Yeah. Snowflake caught or piqued my interest when Berkshire, obviously, and Buffett were talking about buying it and did buy it. But because this price went so high so fast, I just never looked into it because I'm just like, yeah, there's other opportunities. But now where it's at, I might have to do a little more research into. I got kind of, as you just mentioned, I know just kind of the basics. I have never looked into more of the fundamentals or trying to just understand the business in general from a consumer standpoint. So it might be something I'm looking into. Maybe I'll get back onto that topic next week. But yeah, that's just one that always catches my eye, especially because obviously how much hype was behind it, and then just to see that stock fall like the rest of the market. But that one in particular, just it piqued my interest.
Yeah, I think the way I understand it is their companies store all their data in data silos, which means like different parts of the business, like accounting, finance, HR. They store their data in different databases. And what Snowflake's trying to do is to bring all data into like one central data lake, I guess is the term, something like that. And apparently it can save enterprises a lot of money by doing that.
Interesting.
So that's my understanding of
I
Snowflake.
wonder, like I said, I maybe you know the answer to this. I wonder what companies have transitioned over of who Snowflake's gone after. Because hearing those names would be very intriguing, especially to see if they've got any big fish, which I'm sure they have.
Oh yeah. No, they have.
Who else that they'll slowly expand to, and then also comparing that to companies like, well, one in town here with what Switch does versus what Azure and Amazon Web Services and all that. Be just interesting kind of to compare all of those.
Definitely. Yeah, there will be a lot of transformation in that area. Do you have any other thoughts on Snowflake?
Nope, that's really it.
And is there anything else in this 13F that stands out to you or you want to talk about?
Not, and I mean, it just amazed me. I mean, granted, it makes sense now while they're buying it, but it just amazes me how much they buy of Coca-Cola, like just continued. Like they have, obviously such a large stake. Just always see that on there.
Yeah, I think, yeah, they've owned that since like 1990.
Well, and my favorite You might have you might have told me this, or I might have heard this in another or read this, but the fact that his dividend payment now is like more than his initial investment.
I think it's like, yeah, it's like 60% of their cost. They
Yeah.
get annual in dividends, but eventually, yeah, they'll get to the point where, yeah, the annual dividend will be equal to their cost, which is obviously everyone's dream.
Yep. Just crazy to think.
Yeah.
You know, that's all I've got on this. Everything else, honestly, is just kind of pretty.
Yeah, the other
expected.
the other big thing was they sold pretty much their entire Verizon position, which was like their 5th biggest holding. So
And they still have their T-Mobile. Yeah.
yes, they have a
I was
small
just looking
T-Mobile
at that, seeing
position.
in terms of what would that be? Telecommunications or just phone companies they still own. Interesting.
Yeah.
Yeah,
Yeah, I
that's
don't
all I've
have,
got though.
cool.
Thanks
So,
for
of
sharing.
course.
The fan favorite company here that will probably get brought up every week forever.
Yeah, I didn't want to, but
Yeah.
I mean, 13F, I had to, so.
Yep. I'll just jump into, I mean, the big thought that I've kind of been seeing around the internet. Google search trends are up, but today was a bit of a rally. Yesterday was a bit of a rally as well. Do you think we bottomed? And if so, why? And if not, why?
I don't think we've bottomed until we see some stocks zero. Like the one I've mentioned is Beyond Meat. I think Beyond Meat's gonna be a zero.
That's crazy to me. See, that one's hard to believe.
Just looking at the trajectory of their cash flow, how much cash they have remaining. I don't know. I think they're gonna have trouble raising debt, or they could issue equity and just. But if they do that, you're gonna dilute the heck out of your
Yeah.
existing shareholders.
Which is what happened to my vegan food company, which was
Yeah.
up 110%. Yeah, 2 days ago, which shows you how bad of a company it is currently.
Maybe, or maybe they've turned the
I
corner.
will
You know,
see.
I
Like
don't
I
know.
said, it was so funny when I texted you because I was so upset because I was like looking at it and I'm like, it's so dead currently. I'm like, maybe I throw a couple more bucks in, and then the next day it's up 100 plus. I'm like, gosh. Granted, it's probably
That's
going to
brutal.
fall back down to right where it was, but I was kicking
Probably.
myself. I just thought that was funny. But yeah, I think that's a good indicator. The fact that we've had so many companies IPO, and then the fact that probably need, that
Yeah.
what would it be? The elimination of a lot of companies, kind of the purge. Because there
think so.
probably are a lot of companies that should not be around that are, just because debt was so low with interest rates.
Yeah, but basically any company could raise money in 2020 if you just had an idea and a little bit of revenue, you could raise money. So I think
Yeah.
a lot of companies, and you had all those SPACs, and I think we need to see some zeros first before we bottom, but maybe I'm wrong.
Yeah, it'll be interesting. I definitely think, because I mean, with rates rumored, I mean, it's not rumored, I guess it's true. Like rates are going to continue to go up throughout the summer. It'll be interesting just to see kind of where everything lands. And not only that too, like, I mean, the bottom of the market could come before, but what? Because with a recession, obviously that's multiple months. With GDP and also down 20%. But the interesting thing is a lot of stuff usually lags. I know real estate's usually the last one to get hit that'll be shown. But it'll be interesting to see like how long this kind of elongates, because obviously it appears we're in the start of one, obviously, and you would assume that it wouldn't just be a month, just like COVID was with 2020 with that flash crash.
Oh yeah.
Yeah, we're not going to
different.
recover that fast, especially with rates continuing to go up. The one thing that does worry me is because I mean, we've been seeing more and more of it, and I think the next quarters we're going to really see it is unemployment possibly increasing. But the one thing that confuses me with that is there's still so many jobs available. So I don't know if people are just going to have to, quit or get fired or quit their current jobs and then have to transition to jobs they don't want to do. And some of these aren't, though, like low paying jobs. Like a lot of these are just maybe in like markets that they don't want to be currently working because of the, time restraint. I don't know. That's the interesting thing. I mean, we saw the Great Resignation. So it'll be interesting to see where all these people are hiding out. And if they return to the workforce, like I said, does unemployment really actually go up, or are we just going to see people, getting laid off and having to transition to the jobs that are currently open? And will there be enough of those when that happens, if that happens?
Yeah, I mean, regarding the employment, Apple yesterday just announced they're bumping up their pay because still they're having trouble attracting workers.
It's
So there's
it's
still a labor shortage in some areas that
it blows
companies
my
have.
mind.
So
I don't.
like, I don't see signs of, I mean, but then yeah, other companies are laying people off. Carvana, other tech companies are pausing. So
Well, and I mean,
yeah,
this is in an industry that makes sense why it's pausing. But I saw recently that Coinbase, I believe, it was one of the crypto companies. So I believe it was Coinbase, was looking to like grow their workforce by 3 times this year, and I think they're now cutting 10% of their current like workforce. So they go from planning to expand like crazy to now cutting their initial. And obviously that's one where the entire market for crypto has been slammed, so that makes sense. But the bigger thing too is if real estate crashes, though, that's a lot of jobs that are created in real estate with between home builders, and granted that's going to continue, but if people stop buying, it'll be interesting to see. And also on top of that, a lot of houses are going to be finished around summer and just after. So it's going to be interesting to see kind of what happens to all those workers, as well as, like I said, these companies that are struggling to meet earnings.
yeah. And then you have, I think it's the second largest private employer, Walmart. Weren't they saying they're overstaffed? So yeah, I don't know.
Yeah, it's going to be interesting. And I mean, maybe I don't want to say that because that's the wrong terminology, but it's like we have a skill gap almost right now of like a lot of the high skill jobs that maybe people also don't necessarily want to even be doing. People aren't going into, and that's where we're seeing a lot of shortages. And I think also a lot of people with how many jobs have been created at like Uber or Airbnb. It's like, and the internet even, I mean, with Shopify accounts, shout out to that stock I've been buying. But it's just it's fascinating how many people, like I said, it seems like are lacking from the workforce, but then how many people are surviving, especially with what's going on right now with prices up, rates up, gas up, like everything's up right now, and you're not seeing people running to get jobs. It's just it's fascinating to me. I cannot wait to look. Like I said, obviously hopefully we get through it. Not a ton of people are greatly affected by it, but it's just I'm gonna be fascinated to see kind of when we figure out why some of this stuff is happening. So obviously the money supply and inflation's a large reason, or the main reason. Like obviously something's gonna happen, and we always joke that everyone was saying we were in a bubble, which we clearly were. But that was just kind of the icing on the cake of that. But the workforce is the most fascinating thing to me, and this is that post COVID, everyone quitting their jobs and working from home. It's just how that's changed everything. I just if things ever go shifting back more normal, or people are going to have to find new jobs, I'm gonna be fascinated to figure out what everyone was doing.
Yeah, yeah, it doesn't seem like stimulus checks plus unemployment was enough for people to
Last this
just
long.
take work off for 2 years. But I don't know. I think the labor force, I was looking at it recently though, I think the labor force is right almost back to where it was before COVID. So, and obviously unemployment's like in the 3s, which is where it was before COVID. So I think, yeah, we're just about back to where we were.
Yeah. Yeah, that's pretty much my thoughts on that. I was gonna say, if you got anything else, or if you got another topic you want to transition on to.
All I will say is you see all these people criticizing the Fed. Like I'm reading this book right now called $1 Trillion Triage, and it just talks about, mostly focuses on Jerome Powell. And this is a brilliant man, Jerome Powell, and I think he's done a really good job. And I think anyone who's criticizing him and saying, oh, they were behind the curve, it's when whatever, it's a lot harder than they realize. And I think overall he's done a good job.
I was gonna say, I think we've praised him in one of our past episodes, but I'm completely in agreement with you. I mean, you're thrown in an impossible situation. It's either do nothing. I mean, granted, obviously the government and Congress was part of this, but like it's either do nothing and everything crashes and people are extremely hurt, or do what we did and then suffer the consequences later, which we're doing now. But it's half as bad as it was because people were able to get through. It's like you're gonna, face criticism either way. It was a lose-lose situation. And honestly, like even with like the way stocks are right now, and I know stuff like major stocks are down 20% and whatnot, but like, because I think I was looking at Apple today and Microsoft are both down like 20% plus right now. Or maybe not after today, but like up until this week. But just the fact that like it blows my mind that this is only where we're at. And obviously things might continue to get worse, but the fact that this has been just kind of a slow downtrend and it hasn't been like too crazy drastic. Now real estate could turn into that. So I might eat my words there, but given everything we had with how high stocks were and evaluations and IPOs and the way crypto and NFTs and all that stuff was just taking off, it's like, as you said, it's like, how clear of a bubble was that? It's like, yes, but you never can say that when things keep going up, which it did for like 4 years. Actually, well, longer than that. I mean, we had that long bull run, but obviously towards the tail end, it got kind of ridiculous. But just the fact that things honestly didn't get hit harder, faster, it kind of surprises me. Like, because I feel like it's been more of like, obviously things accelerated a little bit this past month, or 2 months, I guess, but like it's felt like a pretty slow bleed to me, especially with the workforce. Like I said, is we're just now starting to see layoffs, and some places are still short staffed. And if people have jobs, people are still going to make incomes at least. It just rates are going to be higher. The real estate market will just not be as hot. People aren't going to want to buy under these rates. But it blows my mind how kind of well we've made it out so far, and hopefully, obviously, in a year we start trending in the right direction again. But yeah, I can't. It's so much praise for Jerome Powell and the Fed for what they've done so far. Like I said, not saying they won't mess up going forward, but an impossible situation they handled to the best of their ability.
Yeah,
in my opinion, at least, which it sounds like we're in agreement pretty much there.
right. Another thing regarding inflation, yes, everyone's going to talk about the headline rate. Like the past year, it's up like 9%, but people are extrapolating that out a few years. It's not going to be like, if you look at the 10-year expected inflation, which is calculated by taking the treasury inflation protected 10-year minus the actual 10-year, it implies that inflation is going to be like 2.5%, maybe 3% over the next 10 years, which is not catastrophic.
Yeah.
So,
well, not only that too, because I mean, what the Fed strives for like 2% a year. Is that what it is? I mean, the other thing to look back on is the past 15 years, we've averaged well below 2%.
mm-hmm.
So over 20 years, even with this year, and then like I said, hopefully, a couple lower years after this, we're still going to be probably right around what is always expected.
Yeah.
So in reality, they gave you, 50. I mean, granted, the economy is another situation. They were pretty hands off. They didn't have to do much, but the Fed still regulates everything. And it's the fact of, they saw how, sorry, something popped up on the screen, so I just lost my train of thought. Obviously they have the data and, seeing the last 15 years of how well inflation has been and how actually low it's been. So the fact of having, 1 year where we uptick to not crash the economy to then, slowly diffuse that going out, and over the 25-year span will still be at 2%, if not lower. I mean, who's not going to take that deal?
Yeah.
But
yeah, we'll see.
Well, people just look at the moment. That's the problem. They don't realize it's like, yeah, it's, I think it's only has it reached 9? I've been seeing a lot of 7, but regardless, 7 to 9% this year. But what about the less than 2% in the last 15 years? That's where I was trying to go with that. It's like, okay, we didn't give credit before that. It's like, things were really good the last 15 years.
Yeah. Agreed.
Or I guess I shouldn't say 15. I should say like 10 post like 2010, but that's like 12.
Yeah.
But yeah, that's all I've got. Any stocks you're buying? I know one thing, I saw a lot of stuff on BABA today.
Yeah, they announced earnings today. I don't have much to say on BABA. It's just more of the same. It's like yeah, it looks extremely cheap on any metric,
but
but
it's extremely risky.
yeah, you don't know what's going on with the government. Their capital allocation is awful. Like,
The one
it's just, yeah.
The one thing I heard today, though, and I don't know if you saw this as well, but it sounded like the Chinese government was made some decision that slightly made it more pro-American investment,
Yeah, I mean,
and meaning
over the
fact
past
of,
few months, yeah, they've said a few things like that,
yeah,
but I mean, it's just words. I don't know if
yeah.
it means
But like I
anything.
said, I think the big thing that they're, like I said, hopefully realizing is, yeah, it's like, we'll see their actions, but is the fact of BABA alone. Obviously, there's other Chinese stocks, but BABA alone could really benefit from American investments. And considering it's their largest company, they probably would be in their best interest to keep that. But obviously, tensions between both countries and China, you just never know. So it'll be interesting to see. I'm pretty optimistic that it'll work out, because I think that's too valuable of an asset for them to, or too much money for them to ignore the fact that from the West, that'll benefit them directly. So we'll see. But yeah, I'm pretty optimistic. I think I'm actually probably going to do a little bit more buying this next week. But yeah, that's all I've got. Any others, like I said, stocks in your watch list, or just kind of just going with the flow?
Yeah, not really. I'm just getting more and more concentrated over time in my top 4 positions, which maybe I'll reveal on another episode. Obviously, one of them is Berkshire, but I've realized I've gotten killed in things that I don't understand as well. So I just want to be pretty concentrated in things I know well and think will do well over time. But yeah.
Yeah, we've talked about that in private, and that's definitely something I've been trying to consider. Oh, actually, one move I did, which, I mean, Grant, I've been in index funds, and Berkshire is essentially an index fund, obviously not literally, but basically acts as one with how much they are diversified.
Yeah.
But I did invest into 2 different index funds through Schwab for the first time, rather than my main Schwab 1000, because they do not have a 500 S&P 500. They go off the top 1,000, which I actually really liked originally, and honestly, even now I kind of do as well. But I did a large cap and a small cap index.
Nice.
Large cap growth and a small cap growth. I just figured, because both have been hammered, especially the large cap growth. I mean, it's stocks that you expect that are in there. But just trying to diversify a little bit. And it's the fact that it's what we always say. I mean, it's right now everything's, down. So hopefully, the main companies all are going to bounce back extremely well. So it's probably going to be hard to go wrong if you go with a very safe company. But part of me is just like, I have my companies that I'll keep adding to their positions, but at this point, it's like indexes and everything are down some, like, way more than they've been at any time in my lifetime for investment wise. So I'm just like, this is probably the best time to be flooding some money in.
Yeah, they're very hard. It's very hard to beat the S&P over time, which
especially in a down market. That's the difference for me. Is it's like, it's hard for me I didn't want to invest in the index funds the last 2 years, because it's like, I started with that, but then it's like we keep reaching all-time highs, and I'm like, it's got to stop eventually. At least we're going to level out. So I'd rather look for the opportunity in the growth plays, especially since I'm young. And I mean, you're, same way in some sense. I'm a little more riskier, I would say. But yeah, that was just one thing that actually did change for me, which I'm glad I remembered and brought up. But yeah, so that's 2 more index funds. So we're going to try to do that, and then a couple of my small caps, and then all the tech plays. That's just kind of, I'm trying to stay concentrated, but at the same time, it's just like everything's so much below my cost basis and a lot of stocks. That's just like, I got to keep adding.
Yeah, regarding index funds, the whole time I've been investing, I'm always like, how hard is it to beat an index fund? How hard is it to find a few really good companies? Like, I don't, it's just shocking how hard it is. You would think 50% of people outperform, 50% underperform, but it's in reality, it's like 5% outperform.
If that.
It's it's just shocking. But it's the more I go, over time, the more I realize how hard it is to beat. And over the last few years, I've done pretty well. I've slightly underperforming the indexes. If I ever get a point where I'm seriously lagging, then I'll start to index. But still think if you put in enough work, you can beat it.
And also, I mean, now's the time to do it as well. But for me, I think just with the way the market is, I'm like, okay, I want to guarantee, a good return. If the market's down right now, the safest place to be is in indexes, because obviously that's going to, be the safest bet that's going to grow over time. And I'm getting at it a good discount right now. So that's just kind of where my head's at. I'm only doing
I agree.
20% in it. I'm still doing my individual stocks that I love that I've been investing in, because I mean, those are the ones that if they bounce back even half as much as where they were, it's like going to do extremely well versus the index will not. It'll be more of, that steady incline, but yeah, that's kind of all I've got. That's all my updates. You got anything else, or you want to close this out?
I have nothing else.
All right.
Oh, I have Big Lots reporting tomorrow. That'll be an interesting one. I'm fully expecting it to get smoked, but
Big fan of Big Lots.
yeah,
My favorite couch was purchased from there.
nice.
Anyways, thank you everyone for watching. We'll be back next week, and hopefully back on a more consistent posting schedule again. See you guys.